What's going on, everybody? So welcome back. So in this quick video I'm just going to show you how we actually execute buy limit orders in a more efficient way on MetaTrader 5, and I'm going to show you how we mark them up on the charts on TradingView 2, and I'm also going to show you a little insight into how that I layer these positions with my buy limits and how I manage them in a trade. Just remember, everything in this video is for educational purposes only. None of this is financial advice, and past profits do not guarantee future results. So in this example here, I'm going to show you a trade, and this is a buy limit gold trade with a range of 4101 to 4096, and that is roughly a $5 difference between price. So from 4101 to 4096 is a difference of $5. $1 is reflective of 10 pips. So for that range there, we know that $1 is 10 pips. And we know that we have a range of $5, so we know that that range is a 50 pip range. Now, as we look at this entry here, we can see that we've got 4101 and 4096, and then we can also see our target TPs, which are our take profits at 4103, 4106, 4110, and then we have open TPs for any trades that may continue, and we may be able to turn them into runners. Of course, we have our stop loss 4095. The most important thing you need to know as a beginner with trading is that stop loss is the most important thing. This is your seatbelt in trading. So when we enter a trade, we want to make sure that we are, of course, in the trade to make money, but at the same time, we are also in the trade to protect our capital, protect our balance, and protect ourselves in the journey of making that money. So the stop loss, I always stress to anybody that I work with, is the most important element of the trade. If you do not have a stop loss, then you are gambling and carrying a big risk of potentially blowing your whole account. So for me, when you get into the trade, if you execute a buy limit, the first thing you need to make sure is that you have got your stop loss set. Now, stop losses are not based on a monetary value. They are based on structure in the market of when we think the trade idea is invalid, which means we no longer want to be in that trade. We'll allow that trade to hit our stop loss because we have walked into that trade knowing what we was risking for that trade. So always make sure you've got your stop loss on. So when we want to look at the layering on the buy limits, so we want to try and get the best position possible on the range of the buy zone. So as you can see, we've got the buy zone drawn out on the charts here. It's a 50 pip range from the top to the bottom, as we discussed. $5 on the price of gold would be 50 pips. The lower the entry, the smaller the stop loss, the bigger the TP, and the opposite. On the higher entry, the bigger the distance to stop loss, and the shorter the distance to TP. Now, we really want to make sure that we're getting the best entry possible. So if we was to issue buy limits after we've seen the price wick and reject up here, and we give out buy limits when price is over here, then obviously we're going to enter those buy limits, and when price comes back down, we're going to tap each buy limit. Now, each of our buy limits we would enter at the intervals from the top of the range to the bottom in 10 pip intervals. Now, the ideal entry on this strategy would be to enter at a 0.3 on each layer. So 4101 to 4096, we would have a 1.3, a 0.3, a 99.3, and 98.3, and so on. Now, once we enter all those, can we guarantee that every limit is going to be hit? Absolutely not. We can't guarantee anything in the markets, but we want to try and get the best entry possible. So let's say price has started over here, and it's then started to come down to this point here, where we can see the wicks of the candles. Now, we know that our top entry on that range at 4101.3 has activated when prices came through it. We have then activated 0.3, and we've activated 99.3, and we haven't activated these lower ones here. At this point, it's completely up to you, but I would be deleting these buy limits that did not get activated, and I would just go onto MetaTrader 5 and delete the ones that didn't get activated, and we'll remove those out of the picture, and we know that we've got 3 entries running on this trade. Now, we know that the best entry is our lowest entry because it's a shorter stop loss, and we know it's a larger distance in pips accumulated towards the TPs. Now, everybody's risk appetite is different. Everybody's profit appetite is different. We are not here to tell you when to take profit, and we are not here to tell you when to, manage that loss on the account. That would obviously be like financial advice. However, we can show you from an educational point of view how we enter the trades and how we look to manage the trades going forward. So for me personally, you can see price come up to TP1. I've got 3 trades running because all 3 of the top 3 buy limits were triggered. I've deleted the ones that were not triggered. So now I have a stop loss at 95 to the first entry is a 40 pip stop loss, and then to the next one would be a 50 pip stop loss and a 60 pip stop loss. Of course, keep in mind that when you accumulate those together, you will be adding those stop losses up. So that's why when we lay out, we adjust our lot size. For example, if you are somebody that does a 0.1 position on your trades and you enter 5 trades, it would be wise to do a 0.02 on each trade. Otherwise, if you did a 0.1 on every trade, you're just multiplying your risk more and more and more, and the potential for losses on the stop losses. However, if we can divide those entries and change the lot sizes to accommodate that, then we're spreading it more. Now, when price comes up to TP1, keep in mind we want to keep our best entry. If you then want to close your worst entry, the top one, at that point, when prices came up to here, you can take 33% of your trade out of the market straight away. When prices come up to TP2, you can take a further 33% out of the market and out of the trade. At that point, when price comes to TP3, if you're happy and your profit appetite is satisfied and you want to close that last and final entry at 33% remaining of the trade off the table completely, you can obviously take the profit. Now, if you're somebody who has a different risk appetite to others or a profit appetite that's different to others, you may do something a little bit different. You may see price go to TP1, you may get rid of your best entry. You may see price get to TP2, and on your second entry, you may take partials out of the market. To take partials, you literally go onto MetaTrader 5, which I will show you, and you edit the position and you change the lot size. You have to have a minimum of a 0.02 to be able to take partials out of the market. So for example, if you've got a 0.02, you might take the 0.01 of that position out of the market and leave 0.01 running, but you've taken profit along the way out of the position. You can also alternatively close that first position at TP1. So when it gets to TP1, you can close that trade there. When price gets to TP2, you can take partials again or close, and then this lower entry, you can either take partials at each layer throughout of the trade and leave a little bit running. And then as we know, if price clears and breaks above TP3, which it does here, comes back down and tests, does not quite reach the TP2 level, and then does continue, what you can do then is chase runner targets. When we put runner targets into the group, we will put, for example here, the runner targets on this trade was 4120, 4130, 40, 50, and 700 at the next psychological key level. Now, do we want to have a runner going all the way and still leave our stop loss here? Again, everybody's trade management method will be different, so there is no kind of definitive right or wrong answer with this, and it is all down to yourself and how you manage your trade. But for me, it would be wise to be looking at going break even. For example, the lowest trade running, we would move our stop loss to break even. We know that if that runner comes all the way up here, we're making money. If the price comes up, rejects and comes all the way down, we haven't lost money, because the first entry we closed at TP1 or took partials. The second entry we closed at TP2 or took partials. And if we took partials, we've let it to run to TP3, and we've only now got our best lower entry still running. At that point, we have took money out of the market, we have mitigated our risk, so why would we not mitigate our risk on this one? Another way we can also manage this as well is if our stop loss is originally here and price is sitting above TP3 on any of our entries, you are more than welcome to move your stop loss to TP1, knowing that if price comes down from TP3, you're still guaranteeing a minimum out of the trade of TP1. And if price comes up and stays above TP3, you can move it to TP2, and we are guaranteeing TP2 minimum And then again, as you can expect, if we are chasing a runner target, you can, if you want, move that stop loss to TP3 and guarantee TP3 out of the trade. Now, maybe you're thinking, well, what do I do when we go past all 3 TPs and I want to still move my stop loss and guarantee money out of the market if it reverses? Well, let's pay attention to structure. And we will do more detailed videos about structure, you know, in the coming videos. But if you're new to trading, it's important to notice where price comes up, comes down, comes up again, comes down. This is creating higher highs, higher lows, higher highs, higher lows in structure. So for example, if I was to draw it here on the chart, higher high, higher low, higher high, higher low, higher high, higher low, and so on. Now the market is clearly doing that over here. So our stop loss, what do we want to do with it? Well, we could put it below the most recent part of structure of the higher low. When price comes up again and creates what should be a higher high, if it continues in that directional bias, then obviously we would scale our stop loss even further. And then once price has gone up even further, we can scale it again too. Keep in mind that if you keep it too close to price, you're more than likely going to hit it a lot quicker. You always need to give space for the trade to play out, give it room to breathe, commit to the trade. But at this point, we are completely, absolutely guaranteed profits all the way, risk-free, stop loss is scaled, and we know we're making money anyway. So let's make sure we do not have those psychological factors like greed and FOMO trying to take over and dictate what we do in the market. And again, that's more content we're going to put out with the psychological side of trading, where we want to avoid the greed and the FOMO. But all we're trying to do here in this whole method of layering is we're trying to get the best entry possible. So if that is the lower entry, then we want to look to get rid of our worst entries when we can. And we want to keep our best entry still running. And the entries that do not get tapped, we are happy to delete those because we're active with the entries that have triggered. So I hope that video was helpful for you in understanding how we manage our buy limits and how we enter our buy limits and how we layer across the zone on our buy limits. Not only how we enter and how we layer, but how we can look to manage those trades more efficiently and more effectively so that we're mitigating our risk along the way. And we're trying to maximize our potential on how much money we can get out of the market and not leave any money on the table to lose. Now, of course, there is no guarantees in trading. The stop loss is there for in case the trade idea becomes invalid. But you know, in that video there, we've discussed methods that you can use to move to break even, and methods that we have used to also maximize guaranteeing the profits along the way. So whether that's scaling your stop loss behind your entries, but still giving enough room for the trade to play out and breathe, or whether you're taking partials along the way. If you do have any questions or there's more you want to know about anything we discussed in this video here, then do drop a comment below, and I'll look at getting another video done for you on any questions that I do have. And also, I'm going to pin a QR code right here. Be sure that if you're not already in the free community of Halo Trades, that you can scan this QR code and enter now. We drop tons of educational advice, we drop trade ideas, and just everything all around to build a community to help each other be able to start this journey of trading or improve their already current journey of trading. So yeah, keep your eyes out for the next video and enjoy.